Hello, good afternoon, everyone. Do we have our guest on the, can we see him on the screen? Yeah. Okay, thank you very much. We're very pleased to welcome Jan Hoffmann, the chief of UNCTAD's trade facilitation section, who will brief you on the disruptions to trade in the Red Sea. Mr. Hoffmann, welcome. You have the floor, please. Thanks.
Thank you very much. Hello from Geneva. We tested the sound and video. I trust it works. So thank you for this opportunities. I'll brief you and share UNCTAD's analysis and concerns on the implications of the attacks on shipping and what we are witnessing in the Red Sea for shipping and the global economy. What I will share builds on our analysis over the years on seaborne trade, ports, shipping, comprehensive statistics, data sets. More than 80% of volume of international trade in goods is carried by sea. And the percentage is even higher for most developing countries. So maritime transport is really the lifeline of global trade. We are very concerned that the attacks on Red Sea shipping are adding tensions, costs to global trade, exacerbating trade disruption due to geopolitics and climate change. There are actually now three key global trade routes disrupted. First, we already have the war in Ukraine with all the impacts on shifts, especially oil and grain trades. Second, we also have the Panama Canal, another key route for global trade, which is affected by low freshwater levels, affecting the number of ships that can transit. For context, latest data, last month's total transits through the Panama Canal were 36% lower than 1 year ago and 62% lower than 2 years ago. So this is really a long-term trend. The lower capacity of the Panama Canal resulting from climate change is of concern because of its long-lasting impact. And on top of all this, now we have the Red Sea crisis. So combining the impacts of the war in Ukraine, the decline in transit to the Panama Canal, and the situation in the Red Sea, we are seeing delays, higher costs, higher emissions, greenhouse gas emissions. So the Red Sea route and the Suez Canal is critical for global trade flows. The Suez Canal handles approximately 12 to 15% of global trade. For container shipping, it's even more important. 20% of the world's container trade goes through the Suez Canal. Past disruptions here, you may recall was a lot in the media, the Ever Given, the blockage, March 21, the mega container ship. It blocked the canal and showed the potential of impact on global trade on all routes, not only those going through the canal. Now, the impact of the Red Sea crisis on shipping costs and rates now has been dramatic. The surge in the average container spot rate from Shanghai went up by plus $500, and that was the highest ever weekly increase. We saw resulting from this crisis. Let me give you the latest numbers. So average container shipping spot rates from Shanghai went up 122% since early December. They have more than doubled. The rates from Shanghai to Europe went up by 256%, i.e. more than tripled. And rates to the United States West Coast also increased above average, although they do not go through the canal. And I find this interesting. So they increased by 162%. And so here we see the global impact of the crisis as ships are seeking alternative routes, avoiding the Suez and Panama Canal. So why did the rates go up? Actually, well, since November, major players in the shipping industry temporarily halt. They no longer hold Suez transit. They no longer go through the Suez Canal. They go around South Africa. Again, latest numbers. So container ship transits per week are 67% lower than 1 year ago. And given it's above all the bigger ships that divert from the Suez Canal, so the decline in container carrying capacity is actually even bigger. So the weekly, we call it the TEU, the 20-foot containers transits, they are down 77% compared to a year ago. Tanker transits are also down by 18%. Dry bulk, sorry, technical term, those ships carrying grains, coal, they are down by 6%. Gas carriers, LNG, liquefied natural gas, they stopped altogether. So decline is 100%. Normally you have 2, sometimes up to 5 gas carriers per day. The last one was on 16 January, so it's down to 0. No? So what we really see here are 3 impacts on shipping. First, you have the additional distance, the additional days. So whoever wants to ship something has to pay for more days of shipping. Secondly, not only do you need to pay more days of shipping, but you also pay a higher price per day of shipping. No, that's the market, no, the demand supply. So the price of transiting the Panama Canal went up significantly. The insurance premiums per day, the charter rates for many ships, all this has gone up. So you need more days and more dollars per day. And thirdly, ships go faster to catch up, to compensate for the detour, burning more fuel per mile. This is exponential. So we are also emitting more CO2, more greenhouse gases, not just because of more distance, but because of the higher speed. So what does this mean for the economy? Inflation is of concern. Prolonged disruptions, especially to container shipping, would threaten and disrupt global supply chains, leading to delayed deliveries of goods, increased costs, potential inflation. And we have seen that this can happen during the COVID-induced supply chain crisis. Now, so far, the rates, the container rates, which I said they are increasing, but they are still only about half of what they were during the peak of the COVID crisis. And passing on these higher freight rates to consumers takes time. No, up to a year it can take until really the higher shipping rates really we would see them in the shop, in the IKEA shop, Walmart or so. And so far, also one other difference to the major crisis, the container rates are mostly rising on the routes that go through the canal, plus to west coast of North America. So we have different global supply dynamics. We are not in the overall crisis. We do have overall ships coming online, being built. Energy prices have surged, have gone up, and food prices may again be impacted worldwide. Longer distances, higher freight rates can have a cascading effect on food prices. So the ongoing crisis disrupts shipments of grains, key commodities from Europe, from Russia, from the Ukraine, increasing costs to consumers, posing risks. About 1/3 of grain exports from the Ukraine go through the Suez Canal. UNCTAD estimates that about half of the increase in food prices we saw when the war in Ukraine started was due to higher transport costs. Again, for the same reasons I explained earlier. You had to pay more distance and more dollars per day of shipping. Looking ahead, we remain concerned and we will continue to monitor the impact of these disruptions, especially for developing countries, of course. It is clear to us that the disruptions and attacks on shipping in the Red Sea, they come on top of the other disruption that I briefly introduced to give you the broader picture. These disruptions, again, underline trains' vulnerability to geopolitics, to tensions, and to climate challenges. This will demand swift adaptations from the shipping industries. Easier said than done. We do have programs on building resilience in seaports, in the maritime transport to support our member countries. The world now faces heightened cost, potential inflation, increased uncertainty in food security. So these challenges add to shipping's major long-term challenge, which is the energy transition, requiring the decarbonization of shipping, another main area of work for us. So at UNCTAD, we remain vigilant on potential impacts on global trade, on the global economy, but most especially for developing countries. Finally, UNCTAD does echo the concerns already voiced by the UN and by sister organizations for the welfare of seafarers. you don't want to be shot at in this context of violence. Having once upon a time myself worked as a seafarer, I can really only urge everybody concerned to ensure the seafarers' safety, please. Thank you.
Thank you very much, Mr. Hoffman. Do we have any Edie, please?
Thank you very much on behalf of the United Nations Correspondents Association for doing this briefing. My name is Edith Lederer from the Associated Press. In the disruptions to shipping from Ukraine, the Panama Canal, and the Red Sea, which is having the greatest impact now? And if the Houthis keep attacking ships for months, what impact are you assessing will happen? Thank you.
No, thank you. As an economist, the normal answer to these questions is always it depends. And it does depend on which shipping sector we are looking at. And you rightly posed the question away saying, what if it goes on forever longer? It is true the Suez Canal, in terms of total transits and volume that goes through it, is even more important than the Panama Canal. So in the sense, if this were to go on for years, then a reduction or even closing or not going through Suez is even more negative than the reduction, not closing, of the Panama Canal. Also right now, because it was unforeseen and unplanned for, it had a stronger, more immediate impact. In terms of the longer term impact, I think we can build on what we researched earlier when we looked already in more detail into what happened after the war in Ukraine started, especially on food prices. And when the COVID-induced supply chain crisis started, we very early on said, if this continues, the very high freight rates at that time globally, we forecasted that inflation will go up by 1.5, 1.6 percentage points at a time when we did not have inflation. So we are very proud that we correctly forecasted this. But again, as I said earlier, this is under the assumption that it will be very long term. It is also assuming that in the end, all routes will be affected. At this moment, not all routes are affected. As I think I explained, the freight rates are going up, especially on the routes that go through Suez and to the west coast of North America. The freight rates from Shanghai to South America, to West Africa, they have only slightly increased. So yeah, I hope it's okay if I answer it depends, but it is certainly very worrying if this is not solved.
Thank you very much. Let's go ahead.
Hi, Jan. My question is with regards to the shipping containers going around the port of the Cape of Good Hope. The traffic around there, are those ports able to sustain the amount of traffic that is going through there if there was an increase in traffic around, especially going around Durban and Cape Town?
Yeah, I'm not sure from whom the question is, but I will try to answer. It is effectively, it's not only hypothetical, it is already happening that the ports are overwhelmed with the additional demands on providing bunkering, on providing search and rescue facilities as needed. So it is already a challenge, especially the very first ships that were rerouted. They had not prepared for this long detour. So it's a good point. Thank you for asking, because there's one more problem. The local Egypt is another country strongly affected because they have less income from the Suez Canal. The communities around, and yes, the ports, to some extent, one could argue it's a business opportunity for some African ports, but in practice, it is a challenge.
Maggie?
Hi, Mr. Hoffman. This is Margaret Bashir with Voice of America. Thanks so much for this briefing. It's a little different than other briefings we usually have here. So it's interesting, but also a little confusing for us non-maritime experts and economists. So you said gas carriers have stopped altogether. Why, first of all?
Yeah, I mean, all the decisions of ship owners not to go through that route is for fear of being attacked. And the likelihood of being attacked is very, very difficult to forecast. There are all types of announcements of different nationalities and destinations that are being targeted. And sincerely, I don't have the complete statistical picture. If you are a big container ship and you are hit, it's bad, it's dangerous. But if you are a gas carrier and you are hit, you can imagine that it can be significantly worse. So this is also decisions taken in Qatar, for example, that they don't want to take the risk. Gas carriers are, together with the large container ships, the most expensive ships that exist. So I can understand that the one who takes a decision about the route and the routing says, no, these ships don't take the risk.
But you said the oil carriers, or the oil tankers are less, but they're still moving, correct? I mean, they would also be, I would assume, a big explosion if they were hit, no?
Not, it's very technical. Again, it depends. Not that much. They are also smaller. They're actually more dangerous to explode if they were empty for the gases that are inside. And they're also reducing. They're also, but it's true. Some ship owners and routes are still going through it, hoping that they will not be targeted.
See, very educational briefing. Thank you. And so, which countries receive goods through the Suez? Like, who will be most impacted? Is it the countries in the southern, the southern part then of the world, or does it spread much further? I mean, just give us a little idea. Is it the developing countries developed that are going to be hit by this, particularly in the Suez, the most? Thanks.
The biggest market there is really the container shipping between Asia and Europe. So it is also exports from Europe and the Black Sea to Eastern Africa. But the ones who really where the difference is biggest is the trade between Asia and Europe. I don't have exact figures with me. There are market research, there are statistics like the different routes. Panama Canal also publishes the same. There I would know better that for Panama, it's especially the west coast of South America that depends particularly strong on the Panama Canal. But here it is above all Europe-Asia trade.
Thank you.
Thank you very much. Please go ahead.
Thank you for the.
I had mentioned also the grain exports, that 1/3 of grain exports from Ukraine go through Suez Canal, some energy exports from Europe to India. So it's not only, but I don't have the exact data at hand. Sorry.
Thank you for the briefing, Mr. Hoffman. My name is Gabriel Elizondo from Al Jazeera English. Two questions. One on Panama. You gave some statistics. You said 36% lower volume, I think you said. Is that 36% less cargo or 36% less ships going through the canal?
The numbers I gave were on the total transits. I could also, as we speak, do the same calculation for the dead weight and the tonnage, and it's actually very similar. I've just now in front of me the Excel sheet. The numbers I gave, what I counted were the number of ships passing. It's roughly proportional to the decline in tonnage. It is slightly less in tonnage because the ships that still go through it are on average a little bigger than the other way. But it's the same. This isn't really the volume of trade that is being reduced.
And thank you. Do you have any similar statistics on the Red Sea right now, given the current situation?
I think I gave you the numbers of the reduction in the numbers of ships. I can quickly, I mean, if that's okay for the moderators and colleagues, I had calculated the
I apologize. I might have missed
decline
the
in
number when you said it. I'm sorry.
No. I had given numbers. I believe I had said the oil tanker transits went down. There for the Suez Canal, the numbers I shared were compared to early December, really when the attack started. Well, for Panama, I gave you more the long term because that is a slower, longer term trend. I don't have these exact numbers at hand right now. It would be a bit risky because if I make a mistake at the short notice, so I would prefer to respond this later by email, or we are working on some briefing notes. But overall, the numbers I gave for Panama are for the long-term decline. The numbers I gave for Suez are really compared to from early December to now.
Yes, that's what I was going to ask, Mr. Hoffmann, if you can perhaps share some of those numbers that you mentioned during your opening remarks so we can share for our journalists. I believe that would probably make a bit easier for you to get that data. Any more questions?
Yeah, and also, Mr. Hoffmann, that was all really very interesting. If you, because we don't cover maritime things here. So if you could also send to the spokesperson, in addition to your opening statement, maybe a couple of links to some UNODC data portals or something. Sorry, not UNODC, I'm sorry, I'm thinking about another story I'm writing. UNCTAD portals, that would be super helpful. We appreciate it.
Yeah. No, in fact, I'm here with colleagues who are working on a briefing note that will be out quite soon, and a more detailed report is also under construction. I apologize if this was too technical. I was specifically asked by my colleagues not to make it too technical, but I hope I have to translate it, because to explain the impact, you need some of the hard data and the numbers.
Eddie?
Right. And just to say, we all would appreciate it, and if you could send it now, soon, we'd appreciate it even more. Thank you.
Thanks, Edie.
Yeah,
Do we have any
it's
more
under
questions in the room? Please go ahead.
Arun Lewis from Indo-Asian News Service. Maybe you could include this in the package of information, that data that you're going to be sending out. If you can put some kind of a dollar value or a percentage value on the impact on world trade because of the Red Sea issues within a given time frame or some such thing, it would be helpful. Thank you.
Thank you.
Thanks very much. I think that's it. So thanks very much, Mr. Hoffmann, for this very valuable information. We're going to wait for your remarks so we can share with journalists, and please keep us updated on this issue. Thanks very much.
Thank you,
very
and sorry
much,
to be
everyone.
so demanding.